Hello, this is Jo from Kepler Trust Intelligence. In today's video, I want to provide a whistle-stop overview of Schroder Japan, which has a ticker SJG. Starting off with the manager, this is Masaki Takitsume, and he has almost 30 years experience of investing in Japanese equities. He joined Schroders in 2007 and took over managing the trust in 2019, although it's worth noting that he worked alongside retiring manager Andrew Rose for some time prior to that. He's supported by the wider Schroders equity research team. That's 12 analysts based in Tokyo. And this on-the-ground capability is a differentiating factor for the trust. It enables them to build strong relationships with management teams, and that's really important when investing in Japan. And they undertake an active engagement programme of around 2,500 contacts with Japanese companies each year. So what's the principal investment objective of the trust? Well, it's to achieve long-term capital growth by investing in a diversified portfolio of best quality but undervalued companies listed in Japan, and to exceed the TSC First Section Total Return Index in sterling terms over the longer term. So moving to the portfolio in a bit more detail, Masaki holds a best ideas portfolio, typically around 60 to 70 stocks, but it's unconstrained by market cap and by sector. And he's looking for company-specific growth drivers. He's also avoiding companies that might suffer from macroeconomic or structural or cyclical headwinds. This value-orientated tilt does differentiate the trust from some of its peer group, but it's not an old-style value strategy. Value is very much looked at in conjunction with quality and growth characteristics too. I wanted to go through SJG's monthly fact sheet briefly because it provides an excellent insight into the current portfolio weightings, and you can find this on the Schroders website. So Masaki splits performance drivers into three broad categories. The first is market misperception. That's around 40% of the portfolio. These are companies whose growth prospects and self-improving credentials aren't necessarily reflected in current valuations. So we've got companies such as industrials conglomerate Hitachi, metals and mining business Nippon Steel, where Masaki perceives the valuation doesn't reflect the transformative strategies being undertaken by the respective management teams. Next up is market oversight. That's about 30% of the portfolio. These are undervalued companies, typically with strong and defendable business franchises in niche product areas, and they're often small and mid caps which are overlooked due to a lack of sell-side research coverage. So in this category we have industrial cooling business Fukushima Galilei, and essentially these are highly competitive businesses trading at a significant discount to their peers. The third category is short-term overreactions, about 15% of the portfolio, and these are opportunistic positions from short-term transitory events that depress valuations to potentially unsustainable levels. So in this category we have IT services business Nomura Research Institute and food packaging specialist FP Corporation. These are beneficiaries of long-term structural tailwinds, but their shares have been sold down aggressively. Finally, the remaining portfolio is invested in best-in-class operators, so Sumitomo Mitsui Financial Group, Asahi Group and Oryx. SJG is currently overweight machinery, information and communications and insurance, amongst others, and underweight electrical appliances, wholesale trade and banks. Overall, the portfolio is currently overweight small and mid caps. They should benefit from the recovery in the domestic economy, and underweight more growth orientated stocks, which Masaki feels are trading at high valuations. So let's move on to performance and move up the fact sheet. It's fair to say the trust has a strong track record of outperforming its benchmark index, both in share price and net asset value terms over 1, 3, 5 and 10 years, which is pretty impressive indeed. While the trust's aim is principally capital growth, as we've discussed, some of the underlying companies do generate an income, and the growing popularity of dividends in Japan has helped to boost total returns, and the trust is currently trading on a modest dividend yield of just over 2%. In terms of gearing, their policy allows gearing of up to 25%. However, it's typically between 10 to 18%, and it's used to increase investments often in the small and mid-cap sphere. Gearing has been gradually increasing since 2022 and is currently around 12%, as you can see here. In terms of discount, SJG is currently trading on a discount of around 10 to 11%, which could also provide a kicker to returns if the discount narrows. Finally, it has a tiered management fee, which aims to pass on economies of scale to investor as the trust grows in size. So for the first 200 million of net assets, the fee is 0.75%, dropping to 0.65% thereafter. The current ongoing charge, as you can see per the latest fact sheet, is 1.14%. If you'd like to find out more about SJG, there's a wealth of information on the KTI website, including our latest research note, which I will show you now. I can also thoroughly recommend the insight articles on the Schroder's website, where the managers discuss their thoughts on opportunities and themes in their trust. That concludes our brief overview of Schroder Japan. Thank you for watching the video today, and we hope you join us again soon.